Good morning, guys. Today is January 30th. It's about 9:30 Pacific time. Hope everybody is well. Markets, I think the big challenge is going to be until earnings from Apple, Microsoft, Google, Microsoft and Google today, Apple later in the week, Amazon later in the week as well, Thursday, come out. It's going to be a little bit of a wait and watch kind of a mode. I think those four will announce good earnings. I'm not worried about those earnings. The market has run up quite a bit, so it's going to continue to go up until we find something interesting for it to be able to move in one direction versus the other. Okay, so today one of the companies I wanted to talk about is a favorite company of mine that I've been talking about for about a year. It's Symbotic. Symbotic is a robotics company, and I thought we'd go through a little bit about my background about why I like the space so much, and then about the company, and then we'll go through our five-step analysis. Now, to give you a little bit of context as to why, when I was at Amazon, one of the things that is very important to Amazon is how do you optimize a lot of the fulfillment. Amazon has over 150 different fulfillment stores around the globe. In fact, many more than that. A fulfillment center is a little bit different than a distribution center. A distribution center is an old retail kind of a model. What a distribution center does, different from a fulfillment center, a distribution center is when manufacturers will send their trucks with pallets and pallets of goods to a DC or a distribution center for Walmart, for example, or Albertsons or Kroger or anybody like that. Once they come to the distribution center, then the key point is to be able to take those products and send them to a store. Now, each of these large companies will have multiple distribution centers, 12 to 15, in some cases, even 20 to 30 in case of, or even 100 in case of Walmart. But the key part is when you get inbounding products, that's called the first process, inbounding. It comes inbound to you from the manufacturers, so Coke, Pepsi, people like that, or maybe even Lay's chips. They come in big pallets. Pallets are very large size crates. Now, once they come in, they just take them, keep them in their warehouse, and as and when required, they will take those pallets, put it into trucks for Walmart, and then ship them within their distribution center to their 15, 20 different stores that DC typically tends to manage. That's different from a fulfillment center. In a fulfillment center, you get products coming inbound from a lot of manufacturers, but you have to break down that pallet into crates and then break it down into cases. You have to break it down into boxes, and then you have to break it down into singles if necessary, because what you're doing in a fulfillment center is you're shipping directly to customer. So that's a big difference. I want to make sure that everybody realizes that a DC, distribution center versus a fulfillment center, is a very different architecture. You have to break down the product. You have to be able to make sure that you store them in the right format. You have to be able to retrieve them when someone makes the order. Then you have to pick, pack, and ship and send it off to the customer. So there's a big difference in the model. Now, this whole process is very, very labor intensive. And what Symbotic, other people as well, such as Amazon themselves, do is to automate as much as this is possible with robots and AI. So that's what the vision for Symbotic is, to imagine the supply chain, especially starting with the fulfillment center and the distribution center to a certain extent, with AI and robotics, so that you can make the distribution center and the distribution network into an asset that allows you to be able to ramp up with it. So what does the order fulfillment process look like? Let me walk through it as an example. You go to Amazon.com or you go to any website like Walmart, and you say, I want to buy, let's say, for example, one t-shirt. Now, the moment you say that, you get it within the next, depending on the e-commerce provider, day, 2 days, 5 days, whatever, in an individual box or an individual package shipped to you. That logistics is typically from the fulfillment center. Someone goes in, receives the order. Once they get it, then the right product has to be picked from all the other t-shirts that exist, or pants or shirts or anything like that. Then it has to be packed into a nice container box typically, or maybe a small little case. Then it has to be shipped to you. Then it is sent to a truck which takes all the other packages, UPS, FedEx, or maybe Amazon fulfillment. Then they will send it out to a local fulfillment center. Then they'll make sure that they distribute it to the end last mile coming to your house. Now, before that process is what Symbotic, Amazon Robotics, Kiva, and a lot of these other guys do. They receive crates and pallets from a lot of customers. That's step number one. Step number two is to be able to take that, measure it, make sure that every one of the things is what they say it is, cut it, and make sure that the big pallet is now made into smaller ones. Then they would ship that out, store it. When I say ship it out, meaning ship it out within the fulfillment center, then they would store it. Then when the order comes in, then when your order comes in for the t-shirt, then someone would go, typically in a smaller fulfillment center, they would go walk up. I've seen this in a lot of Amazon fulfillment centers that are very old as well. Someone would actually walk up, walk to the specific aisle, pick up that product, put it into a bag, bring it to the front, then pack it, and then ship it. So pick, pack, ship from the warehouse. So that's the fulfillment process. If you have to look at it in a little bit more detail, if you look at it from the standpoint of what all are the steps, the inventory is received, that's typically coming in calendar. So this could also be third-party shippers, for example, 3P sellers, as they call them. People are actually shipping the product directly from a China or from some other location into an inventory location, such as an Amazon warehouse or Amazon fulfillment center, and it's inspected. Make sure that the product actually what it says it is. There are no damages, there are no box damages, etc., counting damage. And then they are allocated a specific scale, which may a space, sorry. So what they say is, okay, this is fulfillment centers are large. There are millions of square feet. Each of these, they're sorted by different locations, different types of products. So it's easy and quick for people to be able to pick and pack and ship. So once the space is allocated, then they will take the boxes, or they might take it and keep it in different locations. Amazon believes it's better off to keep it randomly located. So as soon as the order comes in, it is very easy for someone to be able to pick, pack, and ship from that location. After that, the fulfillment team actually receives the order from you placing an order for a t-shirt. The customer receives a confirmation saying, hey, we got the order, we're going to set it for you. Now someone will go, or in the case of Amazon, they sit in these stations where the robot brings different products to you automated via AI. That's what also Symbotic does. They will bring a whole, maybe what they would call in a lot of cases, a shelf, which has multiple different slots, each of them with different products. They will, the robot will tell you, hey, pick it up from A7. So you go A, B, C, D, E, F, G, and then it's 1, 2, 3, 4, 5, 6, 7. You pick the right product, you put it into a Amazon label. You put it into an Amazon box, you put a label on top of it, then your order is shipped. Then they will reconcile the inventory to make sure that, okay, there is one that has been taken away, you've got to know how many are left. Then the order is delivered and refunds, if they happen, also are taken care of. So think of it in a multi-step process. Now, what Symbotic does is they've built a whole system of robots, artificial intelligence, to be able to help you do this in an automated fashion so you can scale. Why is this important? As the number of orders increases, Amazon has gone from millions of orders a day to multi-million orders a day. It becomes more important that you do not have the bottlenecks that human beings have to be able to create and manage this. So what robots do is to allow you to make sure that this is much more easier to do. So from the point of, as soon as the thing is inbound, the robot will come, it'll tear that specific pallet, pick and chew it to each of these individual boxes, keep them, that can then be taken at the other end of the robot. You see that this is a white robot, I'm going to call it. This is the pink robot. The pink robot will take it and put it into specific slots and shelves where it needs to be kept. This works in coordination. So this is the inbound pallet. There you can see over here. It's an inbound pallet containing multiple items. Each of these will have to be scanned by barcode. Then the robot would pick it up, and this one might send it to one location within the warehouse. Another one might send it to a different location within the fulfillment center. So they are completely seamless and managed in a very easy enough fashion. Now, once they are kept, each of these is kept, as I mentioned to you, in a shelf. A shelf is a large set of rows and columns, and these shelves can be managed using the Symbotic robot. This is, think of it like a golf cart that is completely automated. So on top of this, you can either have the Symbotic robot pick up specific boxes. It'll go to a specific location, pick it up from that place, bring it to you, or it would go and bring an entire shelf where you might have to pick a smaller box, for example, smaller case, smaller product. So all of these, whether it's the big robots, whether it's the inbounding robots, or whether it's the movement robots, are all developed, managed, delivered by Symbotic. So at a glance, just to give you a little bit of a sense, there are about 35 of these systems. Each fulfillment center warehouse is a system that they built. They have completed 12 sites across these 35 systems across 12 different sites. They have large customers like Target and Walmart, which are their biggest customers. The CAS, which is the founder is from the warehouse grocery themselves. So the founder himself has actually faced this problem and built this for that specific case. They have about $23 billion in backlog. A TAM that is ridiculously large at $500 billion, and they're cash flow positive. So they're going to get to a very good point. They're doing about $1 billion in revenue right now, and they're growing like gangbusters, 60% year-over-year growth. It's slowed down a little bit from 100% year-over-year growth, but this is still a very fast-moving, very fast revenue company. Okay, so what does Symbotic actually do? It is very expensive to hire people and keep them in multiple shifts in a lot of these fulfillment centers. Labor pressures primarily are a combination of cost and also availability in a specific area. So when I went to the Kent fulfillment center for Amazon, you'll find at least 2 to 3 to 5,000 people working there. Each fulfillment center employs a lot of people. A lot of the work is dangerous as well. You can imagine these boxes, pallets are very large, they're very heavy. People have to move quickly because they're measured on how quickly they get the work done. They might make a mistake. They might have a little bit of a challenge. They drop a box, creates a lot of issues. Robots don't do that. So that's one of the big things that is the advantage of Symbotic. The second one is omni-channel strategy. What does that mean? You go to Kroger.com, you go to Costco.com, you go to Walmart, you go to Walmart or any other place.com, you place an order, you want to be able to either take it from that location, which is buy online, pick up in store, or you want them to have them ship them to you. So omni-channel essentially means you have to be able to allow the customer to buy it and then fulfill it from wherever they want to be able to take it. And the third one is SKU proliferation. Most people don't understand this part of it more than anything else, but this is interesting. Previously, manufacturers had to fight for shelf space on a Safeway, on a QFC, on an Albertsons, on a Aldi, whatever your local supermarket store. They had to fight for shelf space because shelf space is very, very crucial. If you get into a shelf space, there's likelihood of customer buying it from you. But the retailer, on the other hand, wants to make sure that shelf space dollars is maximized. So they used to be very particular about storing and stocking between 20 and 30,000 SKUs in an average grocery store compared to a Walmart, which is 5,000 SKUs, and only keep a few number of products so that number one, it's easy. Number two, the shelf space is maximized. Now you go online, you can buy millions of SKUs. You can buy any product because now the product is actually shipped from the manufacturer directly to the fulfillment center. If someone orders it online, they can ship it directly, right? So that increases the number of SKUs that these large third-party marketplaces actually have. So what Symbotic helps you do is take care of these three issues. No issues with labor, making sure that you can deliver the customer even online, and making sure that even if you have tens of thousands of SKUs, you should be okay. What Symbotic actually does is they make this entire system for you. It's a buffering system that actually takes the pallet, takes the case, takes the box, stores it in a large warehouse-like look-alike facility. So completely automated by robots. You'll get the inbound boxes as soon as so. This is a truck. Think of this as a truck backing up into a garage. They would take the boxes again from a robot would come in, pick those boxes, then it would cut the pallets. It would actually take that, put it in another robot, would take each of those boxes. It would put in a conveyor belt. The conveyor belt then moves an ability to be able to go up and down, as you can see over here, and also left and right through the space. And it'll take it and put it in the right place for you. Then, as needed, these small robotic golf carts, as I call them, would at this station, someone would be right there. Let's say, for example, this is an outbound cell. Someone is sitting, or not sitting, standing right there. Someone places an order for something. This kind of a golf cart thing, robot would go right over there, pick up the right box, come back, give it to them. They would then pick the item that is necessary, pick, pack, and ship. Completely automated. Is the number of people required for you to do this? A third or even a fourth in some cases. So the cost savings are enormous. Most of the companies will use Symbotic or competitor Symbotic because Amazon doesn't share any of their robotic technology with anybody else. So what's different about Symbotic? Number one, it's software model as well as hardware model. They are fully autonomous robots. Some of it will actually be able to take the inbound box case and put it in the right place. Some of them actually, and they can do case handling as opposed to previously it's pallet handling. Remember, I talked about it, pallets, cases, boxes, individual units. They can actually handle cases, which is much harder to do than entire pallet. Most people can just take a pallet. Most robots can take a pallet, put it in a place, and bring it back. That's what you need in a DC, in a distribution center. Fulfillment center, you need case handling, case level storage. So it's very important to be able to say, I want to store this case in the specific location. And then when you need it, you can be able to unpack it. Modular system design, what that means is you can only buy the robot if you want that goes ahead and pulls systems in and out, or you can buy just the robot that packs the case and puts it in the right place. Okay, so the supply chain market itself is $1 trillion market. And what you want to be able to do is to break it down into small items or atoms, as they call it. Manufacturers and wholesalers will sell pallets and cases across to a warehouse or a fulfillment center. The challenges, of course, are, the manufacturer might say 20 boxes, you might get 15 boxes, or you might lose one box because it's fallen down. Timing mismatch, what that means is Truck comes in at 8 o'clock, they have to wait because the only time they have available is 8:15. That means you're waiting and spending time 15 minutes. So that 15 minutes is an easy example. Think of the truck that comes in one day late because of snow. Location mismatch, they might want to send it to the fulfillment center in Arkansas, but they end up sending it to Nashville. And it's very resource intensive. People are needed for a lot of this. What they do is allow you to be able to atomize it, make it smaller, align to make sure that they can give you a lot of buffer to time it appropriately to location. They do all of that work. Now, when you get it into the warehouse, you can either send it to the retail store, like a distribution center, you can send it to a micro fulfillment center, which means this is only purely for local fulfillment, or you can do home delivery. So what Symbotic allows you to do is to manage all of those three things in one location. That's what I mean by omni-channel fulfillment. Remember, we talked about it a couple of times, a couple of slides ago. Omni-channel fulfillment means if I order it from you, I should be able to pick up in the store, or I should have it locally delivered with me within 1 hour or so, or I could just have it delivered next day via shipping carrier. They do have a lot of competition. The traditional vendors, legacy companies, they do all some parts of this. Vanderlane, Honeywell, they all do different parts of the fulfillment center, distribution center. And then the upstream with the fulfillment side, so DC side, and then the fulfillment side. The fulfillment side, there are a few more competitors. Berkshire Grey is probably one of the bigger ones. The best known is Amazon, which bought Kiva Robotics. Very good system, very, very, very automated, works very well. They've had multiple generations of those robots, work very well. It works very, very well. I've seen it work. I've been at Amazon for 2 years. This works really, really well. Some of these other companies are decent competitors, but Berkshire Grey is probably one of the better ones. The rest of them are okay. I've seen a few of them in terms of demos. I've not really looked at those companies in a lot of detail, but I can tell you Symbotic is ahead of most of these companies. The ROI, return on investment for a customer Symbotic is dramatically lower in terms of the cost from labor. It is very efficient as a model because you can actually time robots work much faster. Besides costing less, they work much faster. And the size of that fulfillment center, because you don't have to have people with OSHA regulation requirements associated for people, tends to be much smaller as well. Of course, robots don't make too many mistakes unless you make a programming error or a bug. People make a lot of mistakes, and that becomes a lot more easy. And that allows them to be able to lower their cost overall. A typical company will sell over $250 million, nearly $10 million a year over the life of a 25-year useful period of a robot vendor. So one of the things that they've also done is innovated around break pack innovation. What does break pack mean? You get a big pallet, you break it down into cases, you break it down into packs, and you store it in the right location. That a Minibot and Symbot are two robots that they built, along with the robots that pick and put in specific locations. So inbound sell is when the product comes in via pallets and trucks. Outbound sell is when you pick, pack, and ship. Okay, so who are the customers? Walmart is a big customer. They've committed a lot of revenue. Symbotic has $23 billion, as I said, in orders already that they have to fulfill. They have Albertsons as a customer, CNS, which is the company that started Symbotic. The same founder also owns CNS Wholesale Grocers. What they've announced now is a partnership with SoftBank, which is one of the largest investors in the world, with a Vision Fund. And that new joint venture called Greenbox allows them to be able to, it's a 6-year contract. It's for about $11 billion. So they have $23 billion under contract already. They have to just fulfill. This is not a sales problem. This is a fulfillment problem. Accuracy, fulfillment, commitment, consistency. How many products can they fulfill very quickly? And gives them more ability to be able to expand beyond the United States as well. What does Symbotic have to do to grow? Number one, they increase the presence with existing customers. So it's Albertsons, the wholesale grocer that I mentioned, CNS, and Walmart, or they can win new customers in other verticals, such as grocery and merchandise, going beyond the general merchandise. They can add new verticals as well, such as Home Depot. They can go after those customers. Or they can add new geographies, which they're doing with Greenbox, and then expand the products to be able to do more automation and more robots. The Greenbox joint venture essentially is Symbotic and SoftBank. They both together own Greenbox, what Greenbox has committed via SoftBank is to be able to buy $11 billion worth of equipment. They're going to build out automated warehouses in multiple locations, and they can then rent these out to customers that need them. That's the value proposition around Greenbox. So Greenbox would go to other verticals. Remember, we talked about here, they could go to other verticals, they could go to other geographies and say, hey, we'll build out this. We've already built out this entire automated footprint robotics fulfillment center. You can come in, you can send your products here, we will ship it directly to your customers, and we charge you for it. Greenbox also allows now Symbotic to be able to go after not only a build and manage, but also an outsourced location for your fulfillment centers. So they have a lot of advantages with this. This is a recently announcement, a couple of months ago, actually, about 2, 3 months ago, and the stock has done pretty well given those. I'm not going to go to a lot of the details of what the green box and Symbotic contract terms are, but essentially think of it like getting 11 to 12 million dollars in additional new revenue opportunity because they're committing that revenue to green Symbotic over the next few years. They have an annual recurring revenue that comes in from the software as well. And then the 35 million dollars which Symbotic is putting in, everything else is going to be Symbotic's contribution from our robots and from a location perspective and from a software perspective. Okay, they're expecting to go live with this in 3 years, 2026, when they actually get first system operational, when they can get to take in clients. So before that, they're just building out, making sure they get customer commitments for those. So financial highlights, growing, very visible growth at scale, $1 billion in revenue already, highly visible growth by very contracted booking. They've got a very strong backlog, good margin business. We'll go through that when we go through the 5-step process. Good EBITDA margin growth, they're cash flow positive, and they're CapEx light because what they do is they actually allow the customers to be able to buy it, or they can do it through Greenbox. What does Symbotics provide? They provide systems, so entire warehouse, fulfillment center, distribution system with everything else. They can provide software alone, and they can also make money from the parts and the service. So they have MiniBot, and they have the SKUBot, and they can also do the end-to-end robot management. They can do this maintenance and support, and they do a very good job of being able to grow beyond their existing set of customers. They've got nearly $1 trillion market opportunity. I really like this company a lot. I think this is a very good, very strong product company. All right, so now we'll go through our 5-step process. Let's see what we find. We always start with the financials. We start on an annualized basis from the income statement, work our way to the balance sheet and cash flow statements. As you guys know, almost did no revenue before, but this was before they went public as well. $593 million in 2023, $1 billion in 2022, 2023, 100% growth in 2023. Trailing 12 months is about $1.8 billion. They're about 10%. This is about 10 to 20% gross margins, looks like. 20% gross margins, and net margins were, oh, that's not bad. They only lost about $23 million on a $1 billion upside. That's pretty good. So they're capital efficient, as you can see. Let's look at it from a quarterly basis. So they went from $90 million in quarterly revenue to nearly 3 times that, to 4 times that actually. 4 times that in just 4 quarters. 100% growth, 100% growth, 70%, 60%. They slowed down a little bit, but 60% growth is dramatic as well. Roughly about 25-30% in gross margins, and now they're slowly getting to the point where they will get to profitable. This is a very small number, $6 billion. That's hardly anything. They'll get there in a decent time. Balance sheet. What does their balance sheet look like? Their balance sheet annualized, they had about very little money. Then they got an investment, $1 billion in when they went SPAC, so they raised money from that. Almost $1 billion still in cash, and debt is about 13 million. Very small, very manageable, strong balance sheet as well. They have cash flow, so that's also good. There's not too much for you to worry about in terms of the stock. If you look at the statistics, they're not earnings yet, as you saw, small 6 million or so loss, growing at 60% year over year. 2 times price to sales. They're about $24 billion. This is not 2 times price to sales. This doesn't make any sense. Their sales are about $1.8 billion, $1.2 billion as you saw, and market cap is 24. So this is nearly 20 times. So this is a little bit wrong. Think of this now. This 2.65 is probably 20.65. 15% to 20% gross margins, negative 1% margins, manageable, very manageable. This is at scale business. Okay, so let's go now to the chart. We're going to go to the all-time chart. Where this was the SPAC, moved all the way, then did a scale markup, then a little bit of a markdown, did a very good base for all the way to December 2023, did a good base building, and then just an absolutely beautiful markup phase, markdown phase after a consolidation. This is a markdown, consolidation, markup phase, and now a little bit of a correction again, down to the 39. So I'm going to say they all the way went up to the $60 range. Yeah, $63 range of the last quarter earnings, and then have corrected after that. So this should logically be a good point for them to meet again. 52 should be a good point. And then if I had to do a very good job of even looking at Where are they at from yeah, this would probably be it. Maybe a little bit lower, but 39, that is going to be another bounce point. Where are they at? So if you had to look at it, this is a consolidation phase. That's what I'm going to put it at. In the largest time frame, they're still consolidating. It's a long consolidation, 60 to 30, but still in consolidation phase. If you could look at it, this could be literally a stage four kind of a markdown. Let's continue to look and see where it goes. So this consolidation, yeah, definitely. If you look at it in the weekly chart, you can tell that this make a double top, or actually the head. This is the head, shoulder left, shoulder right, move down, consolidated very nicely at the 39. So it's still in the consolidation phase in the $30 mark. I think that's probably because of the valuation more than anything else. They have a good backlog. They have only had $1 billion in revenue, $23 billion in backlog. So this company is going to continue to do very, very well. I don't think revenue is going to be the challenge. How well do they manage their costs and how quickly can they get their shipments out would be the case. And if you look at it from a weekly standpoint, it's a little bit of a down. So it's taken it down and it's trying to consolidate. So I would be a little bit more cautious. Earnings are in a week or less than a week, right? Earnings are coming up in a week. I do remember seeing earnings in a week. I'm not sure why that doesn't seem to be showing up. Yeah, earnings are about a week. So on a daily chart chart point, this was the top. So this is the left, this is the right. So certain head and shoulders formed a way down and then consolidating. This even within the daily chart, it's consolidating and it's very close to the 100-day moving average. This is as close as you're going to get to be able to get a good price on this one. Look at this stock. And what happens to this stock, which is very interesting, is every time before earnings, this thing just drops and you're going to see a big green candle drop, big green candle drop. I'm expecting this to go really high. Big green candle for next week. Earnings are on the 5th of February, next week. So expect the stock to actually deliver good earnings and then head up after earnings. Look at this consistently. Let's look at the last few weeks. Look at this earnings. Drops and then picks up after earnings very, very well. Look at this. Drops, green candle, picks up after earnings, moves a little bit lower, drops, picks up after earnings. So 4 earnings in a row. Just look at that. That's how it's performed. Drops before earnings. This is such strange stock. It drops before earnings. Most stocks usually will run up to the earnings and then they have a little bit of a mess. This one is completely opposite. So that's how I look at the stock. Thank you very much for following. Symbotic is the name of the stock. SYM is the ticker symbol. Leave me a comment. I'd love to be able to hear from you as to what you think about it.